Ladies and gentlemen, Kim here. Welcome to the daily update. Hope you guys had a good day trading today. Market is up quite a bit here on the S&P. We're up about 1.5%. We got 2% positive on the NASDAQ. Semiconductor continues to march higher there. Dow finally made some move today, 1.2%. Small caps and the banks, they're falling behind today, but they are positive today. Banks are down about, no, I mean not the banks, the energy sector is down about 2.5% due to the oil being down there about 4% there. Transport's up about 1%. You know, we got the biotech and emerging market up about 0.5% or so. Grayscale Bitcoin did make a move, 4%. Gold and silver is pretty much a pause day. We got some of these guys are down actually a little bit. The dollar and treasury bond, but VIX is up a little bit on a big update today. And a lot of people always chatter about that, like, oh my God, VIX is up, but the equities are up too. What does that mean? Is it some kind of a signal? It's nothing. It's just random occurrences that happens. I mean, I've seen it happen, I don't know, probably 4 or 5 times in the last 1 year or so. So some people think that when VIX is up, well, when the S&P is up and the VIX is up, that means, the market is going to fall next day. That happened once, but there's another time where VIX was up, market was up, or market went up next day. So it's just random occurrences. I wouldn't pay too much attention to those. Trying to figure out what this means. It means absolutely nothing. Sometimes things just happen like that, especially with the VIX. But let's stick with the S&P spider here on the 65-minute chart. So last time I did the video, the weekend analysis, we're up here at 400. We gapped up quite a bit here, and we made a move the first hour, second hour. We kept pushing until the third hour, and we started stalling here the last 3 hours or so. So I think usually, last couple days, we did witness where the gap, and then we continued on, right? We saw that on Thursday. We gapped up, continued higher. We gapped up, continued higher. But we didn't see anything like that in the last couple weeks of price action, where we see a gap up and pretty much grind all day. We see a gap up, and then we fall next day. We've seen a lot of that happening even prior to it. You can see, like, we see a gap up here and then fall. We see a gap up here and then fall. You see a gap up here and then fall. That was the kind of the theme that we've been in the last, I don't know, maybe a month or so, because I've been analyzing this market with you guys every single day, and it's almost every single time we see a gap up, it always fell. Like, if it's not last hour, it was either grind all day or it'll fall heavily on the last hour. And it's interesting to note the last couple of days, we see that gap up and continuation, gap up and the continuation. And we didn't fall that hard. We kind of hang around there, are printing 406.31 on Spider. So, I mean, at this point, are we overbought? That's probably going to be the last many people's question, right? I mean, we had a huge move. How far can it really go? Because, historically speaking, if we just kind of go back a little bit, looking at the midterm, and since November, we've been getting into this kind of really choppy market where we saw some move and then we'll fall right back down. We saw move, fall down, some move, fall down, some move. Throughout this, for the last 4 or 5 months, that has been the theme of this market, where we saw move, falls down, we saw move, fall down. But there was a purpose in that, right? So the market was rebalancing itself. We talked about this, what I call the great rotation was occurring. So in the last 4, 5, 6 months, what was happening is that the lagging sectors, such as the banks and the energy and the transport and the Dow and the small caps, they all caught up. And that's why we saw the S&P really being grindy like this, choppy market, while the NASDAQ actually saw a correction, right? NASDAQ actually came down, while everything else, some of these laggards start to making this move. market rebalancing itself. That's kind of what this was. And that's absolutely necessary so that the market can, market can have all different indices and the sectors to be rebalanced, and they can all catch up, right? And that's kind of the process we've been in the last 4 or 5 months. And so with recent move, we obviously saw that huge move here to the upside. Regardless if we're overbought or oversold, I'm going to check on my oscillator in a little bit. We'll talk about if all of that. But regardless if we're overbought or oversold, we want to give benefit of the doubt to the buyers, right? We're above short-term moving average there. Last time we retested my short-term moving average was March 30th, and that was like 4 trading sessions ago, right? 4 trading sessions ago. So ever since then, we saw a really, really nice upside move. We haven't retested it yet. It is not a coincidence where the short-term moving average hanging around defending that gap area. Not to mention, we have that rising pivot right here. And this is a good cultivation, that rising, well, potentially a pivot. Currently the resistance, right? That's the rising resistance. We gapped right over it. This is what I call a jumping over the fence. Sometimes buyers don't want to deal with this resistance area and kind of, lag the process, get a little bit hectic, just want to have that smooth transition to the upside. They just gap it over. And that's kind of what we saw here. So if we do see any kind of slide to the downside, any kind of shenanigan down move, 403 should give you that first level of support, but I think the 400 will be a stronger support because there's a gap fill support coinciding with my short-term moving average. Keep in mind, my short-term moving average does have impressive resume. There's a support there, support here, resistance here, right? So that's 400 is going to be important, strong level. But in between, just in between that level, we do have that resistance here. So if this thing kind of takes time to get down here, let's say, then there will be that pivot, that resistance, maybe hanging around to potentially have buyers protect at least half of this gap. Keeping some of that gap is always gonna be favoring the buyers. Remember we talked about this? You guys remember how it is important that sometimes what the bulls do when there's a selling pressure, instead of filling the entire gap, what it does is buyers protect the sum of this gap, right? And when we see that occurring, that's a bullish signal. That was a low in early March right here. This was a big gap up, right? You see that, right? Only half of it, or maybe 60% is open. Only 40% was filled. What happened? That was the low, coinciding with the midterm moving edge. We talked about this on our daily analysis videos. So same concept right here, and bulls are already preparing for this. You can see they're already deploying this rising resistance as a potential new support, potentially this becoming a pivot, so that if this thing comes down later on, maybe this thing might act as support, and so that buyers can potentially keep at least 50% of that gap. And remember, if that happens, that will be bullish, and buyers can thrust higher to make new all-time highs. But at the same time, this does not mean it cannot go any higher. We could. A lot of people thought that this was too much, and you can see that we kept pushing higher. Let's check out that oscillator and see where we're at. See if we can extract any more information out of tonight's analysis here. So my oscillator is telling me that we've never been in this level. You know what I'm saying? It's like since October. And do you guys remember that I've been actually talking about this the entire last month or so? How bulls need to do this. Bulls need to push all the way up. They need to keep this trend going. They need to show strength. And you can see how we kind of got into that choppy, a little bit lethargic market. How this market never pushed all the way up. I remember I was mentioning this many times, and I kept saying I want to see bulls to push all the way. I mean, yes, that's gonna give them overbought. That's gonna bring them into overbought territory. However, once you see the oscillator hitting that overbought, that's when the bulls are truly showing that strength, and they're telling us they're ready to push even higher and further and stronger. We saw that today. Finally. This is the first time we're seeing the oscillator getting record high here, pushing it all the way up. We definitely saw strength from the buyers. We did see that cross, right? We did see that cross towards the end of the hour, and we are at overbought level, extreme overbought level. So, micro term with the overbought signal, maybe there could be some shenanigan or something like that. But you guys also know that at the same time, you have to understand that, the price can actually move sideways, right? Can move sideways, correct through time instead of correcting through price, and letting the oscillator kind of reset before it can go back higher. You guys remember we were, every time when the market got into that bull, like really good upward swift bull rally, we've seen that happening. Like market goes up, sideways, market goes up again, sideways, right? And we're each time basically it's running and resting. Running, resting, eating, digesting. That might be kind of what the market is preparing to do, because I'm leaning that way because I see that bulls have pushed that all the way up today, and this is the first time in in about 3 months here, and I actually look at that as bullish breakout on the oscillator. So let's see how the market plays out tomorrow. You guys enjoy your evening, and good luck trading tomorrow.